The swift accumulation of Bitcoin by these ETFs has surpassed traditional commodities such as gold and silver, highlighting the escalating investor interest in digital assets. Both institutional and retail investors are increasingly acknowledging the potential of cryptocurrencies as a viable asset class. Currently, the combined total net asset value of all spot Bitcoin ETFs has surpassed $54 billion, underlining the substantial financial support these funds have garnered in a relatively short period, outstripping traditional market heavyweights such as Microsoft. I recently stumbled upon a video by Saylor, and he's shedding some light on the success of Bitcoin ETFs in the past 30 days. Let's dive in.
The Bitcoin ETFs are the most successful ETF launch in 30 years, and apparently in the first 30 days, they outperformed every other ETF. They've crawled to the top of 3,500 competitors in short order. I think that they have sparked the bull run and the upward movement in the price. I mean, definitely there's a huge amount of institutional capital flowing into Bitcoin right now that is driving the price because of asset scarcity. The most important thing, or the most important result of this is the ETFs themselves represent regulatory clarity for Bitcoin as the institutional grade crypto asset. I think that's a very important thing. I think secondarily, the ETFs represent an on-ramp for institutional money, and they open up a gateway between $100 trillion or more of institutional money and Bitcoin. I think the third thing is they have sparked this price action, and as Bitcoin moves back toward its all-time high, they have generated an extraordinary amount of media coverage and Wall Street awareness, and Bitcoin benefits from the awareness of the asset class, because as of now, 99% of the mainstream investors really have an incomplete understanding of Bitcoin, and the best thing that we could do is just build awareness that it is an asset class, and then people will start to do the work to understand what it is. And so all three of those things have been catalyzed over the past month by these ETF launches.
Recent from BitMEX research reveals that these ETFs experienced a total net inflow of 7,018 BTC on Thursday alone, equivalent to approximately $472.06 million. The impact on prices was notable, with a wind flow of assets into ETFs leading to a $20,000 increase in Bitcoin's value. Now, that's something worth paying attention to.
We thought that maybe Bitcoin was a competitor to gold, but it's actually run up the leaderboard, and now it's starting to nip at the heels of the S&P 500 index ETFs. Pools of money without an ETF ticker were mutual funds. So if we look at the history of investing, we kind of went from buy the stocks individually to trust a money manager with a mutual fund, and the mutual funds made Fidelity. And then 30 years later, the ETF came along, and it was a universal API that you could use to trade a mutual fund. So in the mutual fund world, it takes you a few days or a week or 2 weeks to set up an account, and it takes you a few days to move your money in the mutual fund, and you have to redeem your money, and it takes you a week to get your money out. And so it was a very slow, low frequency relationship, and the typical investor is going to just do business with one company like Fidelity. When the ETFs came along, you could have any stock trading app, and you could trade from one fund to another fund. You could trade, in and out of funds 6 times a day. You could every day say, well, I want to buy this thing from Fidelity, this thing from BlackRock, this thing from Vanguard. And you could put those funds in the same watch list as your Apple stock or your Google stock.
Saylor eloquently described the role of ETFs as a universal API for the financial market, facilitating seamless transactions across various investment vehicles and offering investors straightforward access to Bitcoin. This innovation has significantly lowered the barriers to entry for mainstream investors, making Bitcoin investment as accessible as trading traditional stocks or bonds. The emergence of Bitcoin ETF has brought about a transformative shift in how investors can leverage their cryptocurrency assets. These ETFs offer a more efficient and secure means of utilizing Bitcoin as collateral, opening up new possibilities for financial services such as lower interest loans and innovative mortgage solutions through reputable broker-dealers like JP Morgan and Merrill Lynch.
Bitcoin didn't have a website for institutional investors, and about a month ago, Bitcoin all of a sudden became something you type it into, your Bloomberg, you type it into your Robinhood app, or you type it into any stock, E-Trade or any stock trading app. Instant information. You can buy, you can sell, and of course, those ETF tickers, they don't just give people, perfect awareness and ability to transact. That's also the global protocol for trading volatility or for issuing credit. So if I had a bunch of money in Bitcoin and I wanted to get a loan against it, it might take me a month or 2 months to find someone that'll give me a loan. Then I have to move to Bitcoin. Then I have to pay double the interest rate that's normal. And that's kind of scary. But after the ETF, people could have the same economic value in Bitcoin with JP Morgan or Merrill Lynch or Bank of America. And they could just say to this broker or banker they've been doing business with, like, I bought a house, I want a big mortgage on it, and I'm going to post a little bit of my Bitcoin as or securities as down payment against that mortgage, and I use it to get a mortgage, or I use it to get a margin loan, or maybe I could use it, I could hedge against it. And so these ETFs opened up an entire financial world of awareness and opportunity and functionality to the 99% mainstream investors. And you really can't underestimate just how profoundly important that is to the entire network. I think that ETFs are just another application of Bitcoin, and there are thousands and thousands of applications coming. So in this particular case, 1% of Bitcoin, 1% more assets kind of flowed into the ETFs. It boosted the price of Bitcoin in the last 2 months by $20,000 a coin. And that means that 99% of the $200 billion of market cap got created, and something like 99.7% of the benefit was for the people that didn't own the ETF. The ETF people bought in at 40,000 and drove the price to 60,000 and have 1%, and everybody else had the other 99% and their Bitcoin is worth 60,000. So in this particular case, if that's taking over Bitcoin by basically making all the people that don't use ETFs $200 billion richer, right? Then you probably want that to happen 100 more times. You'll see other apps. At some point, an insurance company will build Bitcoin into an insurance policy, and then companies will build Bitcoin into their balance sheet, and then a country, and if if a country that you don't like buys 1% of the Bitcoin supply and drives up the price by a factor of 2, it'll be another example of every other country getting 99% of the benefit. I think the lesson of Bitcoin is the best asset. There is no second best asset. Buy Bitcoin. Keep buying Bitcoin. Don't sell the Bitcoin.
If you enjoyed this video, hit that like button, subscribe for more financial wisdom, and as always, stay informed. Until next time.